A highly reputed company, Tata Motors, marked by frequent fluctuation in fortunes. A leading global original equipment manufacturer exporting to over 100 countries. A well-diversified geographical presence, a large sales and distribution chain, and above all, a strong reputation from Tata parentage. 6 manufacturing plants spread out across India, joint venture partnership with Fiat and Cummins for manufacture of engines, production centers in United Kingdom and Brazil, also set up Jaguar Land Rover manufacturing facility in China. Tata Motors' entry into premium luxury segment as a part of inorganic growth plans acquires Jaguar and Land Rover, global names with a rich heritage. JLR, Jaguar Land Rover, has made a huge difference for Tata Motors, particularly post the launch of Defender Range Rover and Range Rover Sport. Plans are on to launch electric Range Rover by end of FY25. Rising operational surplus has enabled a cash flow of exemplary liquidity, efficient administration of working capital is quite evident, and consistently growing flowback into fixed assets year after year exemplifies substantial amount of capital expenditure. Accumulated profits with a prudent payout ratio is behind taking equity to a place of absolute strength. Long-term debt is getting liquidated gradually according to plans of appropriate financial leverage. Out of Tata Motors' profit before tax, a significant contribution comes from Jaguar Land Rover. In Q2 FY25, there was a setback with JLR volume suffering due to logistical issues causing short supply of aluminium and also dispatch delays caused by quality check procedures. It was a victim of discouraging market situation in Europe and China. As a result, the Q2 profit for the company fell by almost 5% year on year, and at the same time, the PBT percentage fell by 250 basis points from its peak in the previous quarter. That highlights the importance of second half H2. In terms of company's profitability, commercial vehicle segment comes after JLR. Tata Daewoo tie-up has been a success story. Commercial vehicle division, second in contributing to company's PBT, has a share of about 22%, but its Q2 volumes suffered due to slowdown in infrastructure and mining sector. Government's policy proposals with a thrust on infrastructure spending is likely to be a source of high hopes for commercial vehicles, which suits the plans of Tata Motors. After JLR and commercial vehicles comes the distant third, passenger vehicles, which contributes too small a proportion into the company's profits. The segment is under tremendous pressure, and with competitors getting stronger, the wafer-thin margins are getting thinner. As for the electric vehicles, the first mover advantage is steadily vanishing. The leadership market share of over 60% is sliding to below 50% in the recent months. The segment has government support with production-linked incentive and customs duty rebate on component imports, but with competition getting hotter, retaining the dwindling market share is more than a challenge. For FY25, Tata Motors is depending exclusively on JLR, which has retained its full year guidance. JLR plans to recover the shortfall of H1 with timely dispatches and absolutely no supply chain hiccups, and that is a great confidence booster for Tata Motors. Quite timely and interesting is Tata Motors' plan on demerger. It proposes to create two distinct companies, one for passenger vehicles including electric vehicles and JLR, and the second company exclusively dealing with commercial vehicles. The demerger is expected to be completed by June 2025. The exercise is likely to get the benefit of specialized product focus and boost the business prospects of both the companies. It is safer to observe that being a part of cyclical automotive industry, Tata Motors has suffered fluctuating fortunes on a regular long-term basis. Its earnings have remained disturbingly volatile and infirm. Tata Motors faces inherent challenges facing the industry, fast-changing, costly technology to match up to ever-changing consumer preferences, governmental legislations to protect consumer safety and environment is an ever-growing challenge for adherence in compliance. Tata Motors' over-dependence on JLR for a major part of its income is a risky gamble. JLR has a very small market share in the luxury car segment dominated by big players. In the Jaguar Land Rover, Jaguar's contribution to profits has been quite nominal and it has remained a drag on the overall profits of the company. However, JLR has plans for Jaguar recovery and improvement, and the car is growing electric way very soon. Observing price action data for last 6 months, quantity has kept its up move in support of price direction moving above the average, while the price has taken a dive downwards, suggesting lower price is likely to continue with volume support, and that gives negative bias to otherwise consolidating moves of daily share price. Share price movement of Tata Motors from a position of peak in July 2024 crashes below 200, 100 and 50 daily moving average. Placement is closer to the lower end of Bollinger, suggesting negative disposition. It's quite interesting that over the years, in 2020 and 2023, the share bounced back on the support level of 100 WMA. It is likely that the bounce back might occur again as the share is depending on the 100 WMA at the current level. The next support for the share price will be 200 WMA, which currently is at 636. Strong and supporting shareholding from FPI, mutual funds and DIIs, reputed name as a global player, being a part of Tata Group, floating separate companies each for commercial vehicle and passenger vehicle is a win-win idea. The sector has an inherent cyclical risk, heavy investment warranted by ever-changing consumer preferences. Hope you found this presentation on Tata Motors to your liking. I am Vittal Prabhu with the fortnightly video on Stock Learning Simplified. You can find videos with similar content at our info card on Stock Learning Simplified. We look forward to your response and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.